Now, a lot of things to digest today. Earnings, the Fed, Nvidia news, a lot of stuff going on. But again, just want to say this first off that again, we have the awesome oscillator turning red now with today's session. So again, I still believe we're going to get a bigger pullback. I'll talk more about that later. And again, I'll show you where I think we're going. Didn't quite reach the upper boundary of the bull flag there. I still think we're going to reach it and probably fill this gap at 59.38, which was the gap fill breakout. The gap that created with the breakout of the bull flag ahead of inauguration day. I think we have a continuation of the election rally from over here after filling this gap, which we've talked about. I've talked about that at great length and detail. I'm also watching the Fibonacci's. Never did reach our 50% retracement at 59.50. Our 61-point Fibonacci of this advance is coming in at 59.09 or so, rounding up there. I think that we could reach that level, back test, and fill the gap. You have gap support there, right there at that same level. This gap, I don't know that we would fill that. I do believe this low is going to hold. I am of the opinion that I still believe that we have this ABC move. I'll show it to you on the 60-minute chart shortly. So I still think we're correcting. I predicted this would happen before it happened. Nailed the bottom. Predicted that in the rally and the December top as well. Some amazing calls, really, with the help of the 60-minute chart, really helping there quite a bit on that. I don't think this is done yet. I think it will be, and I think we will establish a higher low. I just happen to believe that we're going to actually backtest and get probably a Fibonacci retracement, a bigger Fibonacci retracement. I could be wrong. This may be a bottom. We are now getting red, so maybe I'm right about that. And again, I'll be looking to see if buyers come in. If we do go lower down in this level, we'll be watching. The GDP tomorrow, we've got earnings. How about that? Then we have Apple earnings after the bell on Thursday. S&P daily here. Now, NASDAQ daily chart, again, still hanging in there with a bullish reversal of conditions. We have the cloud still green with the S&P. It may flip red if we get a bigger pullback. That's certainly possible. NASDAQ still hanging in there. Again, the momentum line's bearish. Cloud is still green here. Got the 10 now back above the 20. We'll be watching. We're trying to get back here, holding above our 50 period. We'll be watching to see what happens. If Nvidia ends up getting a bigger sell-off back below the 200 period, then again, we might take out this low on NASDAQ, end up going back and filling the election gap, which has not yet been filled. Here on the 60-minute chart, now we've pushed back into the trading range of the bull flag pattern, but we're back above it right now. So again, I'm watching. Does this low hold, or do we go lower? Maybe fill the gap down here, or do we try to take out that low and come back here? Again, S&P and NASDAQ may diverge from one another. We got that topping tail in the monthly time frame. So again, it's possible the December peak was it for the NASDAQ. S&P moved to a new high a couple days ago. NASDAQ did not. Still may, but it's also just as possible they diverge from one another and we stop making new highs like they did when the S&P peaked in 2022. The NASDAQ already peaked in November of 2021. We'll be watching, but again, Nvidia, I believe, is topped, signaling we're about to move into a bear market. But the gap down here from the election rally, again, I think is something to pay attention to should we get further volatility with the tech sector here, as well as Nvidia. I'll be watching this 20,227 area. Oh, I think S&P is going to move to new highs. I'm telling you, I don't know about the NASDAQ because sometimes it does diverge. So I think the jury is still out on that, and I just simply don't know. I have a guess to tell you what I think about the Russell. It's peaked. I think it's peaked. I think the S&P will make new highs. Looks like the Dow is probably going to do it. I don't know about NASDAQ. We could see a sell-off with tech, and we could see, again, that money move elsewhere, helping the S&P 500, even though it has big tech exposure. You may see that divergence between the NASDAQ and the S&P 500. We will see one between the Russell and the S&P 500, if NASDAQ makes new highs or not. Still could get these divergences on the 60-minute chart with the MACD and the RSI. We'll be watching. Do we get a bigger sell-off, or again, is that it? My guess is we're going to get a bigger sell-off. We'll be watching to see if this low can hold. If we get a bigger sell-off on NASDAQ, and if we doesn't, watch the election gap rally, the election gap fill over here at 20,227. I've drawn this channel in from the August low. If we don't fill the gap, I'll be watching to see if we bounce off that. If we do go lower, that trend line could be a trend line of interest for the NASDAQ. And again, whether we move to a new high above the December peak, I don't know. So I'm watching this closely. I'm looking for clues just like you are. And again, I'll be watching the gap we've had here. The momentum line is bearish on NASDAQ, but again, the cloud is still green for the momentum. If it turns red, again, we could come down here or come down to the gap fill area. We'll be watching that. We'll see if Nvidia does drop back below the 200. Is it a drag on NASDAQ? Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. If you could take a moment to do that, I would really, really be grateful. Follow the link below to take you to a secured site. You can donate any amount you want or make it a recurring donation. But please consider helping out today. I thank you for your consideration for that. We have the momentum line, again, bearish with the NASDAQ here. Momentum line bearish. Momentum bearish. We don't have a bearish reversal of conditions. We gap lower and push back up. We'll see if it happens. And if we do go lower, we've got a couple of gaps down below that we'll be watching here on that 60-minute chart I've been showing you. NASDAQ daily chart here, momentum line bearish. But the S&P, it still has a momentum line bullish at this point, and we still have the bullish reversal of conditions that I showed you. My guess is we probably get a bigger pullback, but then again, even if we don't, I still think we're going higher. Whether we get a bigger pullback or not, as we will. I'm looking for a higher low. I don't think this low is going to be taken out. Low, I was predicting we bounce off of that 2023 trend line, and we did. So pullback is done. I think we go much higher. And we're going to top. Get there, nobody's going to believe it's a top. That's what complacency does. Okay, we have a lot of big earnings this week and next week. We have the Magnificent Seven stocks, and in after hours right now we have Tesla, we have Meta, we have Microsoft, and IBM. Tomorrow we'll get Apple and Intel, and next week another big boatload of important stocks. A lot of S&P companies this week and next week. So Tesla, Meta, and Microsoft and IBM. And today we had the Fed meeting. The market was down. The Dow, again, has just been on an amazing run. About to make new highs. We'll see if IBM pushes it over the top there. And again, very well could peak before the S&P 500 and diverge with the transports. That's often what takes place at tops. Doesn't have to happen that way, but many times it does. The Dow was down 130, almost 137 points for the session, down 0.31%. The S&P was down almost 0.5% down to 28 points. The NASDAQ was down about 0.5%. The Russell was down about 0.25%, and the VIX was up almost 1%, 0.91%. The VIX was closed just above the 16.5 level. Again, in order for volatility to really return, we got to get above that 18 to 20 area and then stay above it and stay above the 50-period moving average on the VIX daily chart. So a down day with the Fed. Now, a very, very interesting Fed meeting today, and I'll talk just a little bit about that. And I'll show you the S&P and NASDAQ and Dow, and we'll get to the Russell as well. But Powell did the expected pause today, doubled down on no hurry to cut rates. We're in a good place. The economy's in a good place. Need to raise? We can. If we need to lower, we can. That's pretty much summarizing the message coming out of Powell. No hurry to cut. Doubling down on what he said in December. The Fed did change some language in the statement, but Powell later clarified that the yields jumped on that initially, and Powell dismissed it and downplayed it. So the narrative is that change in language was a little bit more hawkish, talking about the progress on inflation. It was the removal of this sentence right here that kind of caused concerns. As the changes made, you could read this on CNBC if you want to. And Powell dismissed this, and it at first caused some concerns in the bond market and also in the stock market. Previously had made progress toward committees 2% objective, but remains somewhat elevated. And they changed that, removed that made progress sentence, and they just said inflation remains somewhat elevated. And Powell said that at the press conference. But Powell dismissed this and just said, oh, there's just some rewording. And again, these are the changes that were made to the Fed statement. And again, you want to read that, you can read that on this article here on CNBC, what changed in the new Fed statement. Now, the wording on the Fed statement may have changed but on inflation, but Powell and the FOMC committee, they haven't changed. They're still concerned about inflation when they should be concerned about the coming recession. They're telling us it's not going to happen. Powell not changing and doubling down on no hurry to cut rates. On Powell real fast and the tariffs. And first of all, let me say this. Canada, the Central Bank of Canada, they cut rates today and they stopped quantitative tightening. About to get the tariffs beginning in a few days on February 1st. The tariffs, if they go ahead and go forward on February 1st with Canada and Mexico. That might change. Delayed, we don't know. But right now, as far as we know, we're going to see those tariffs implemented. It'll be interesting to see how the market reacts to that. About that in a moment. But Canada taking steps because the expectation of those tariffs. Powell said that we are there's no need to be in a hurry to make any adjustments to monetary policy. No need to be in a hurry. And again, I continue to say the Fed should be in a hurry. They should be slashing rates right now, not worried about inflation, worried about the recession. They're telling us, Powell at the last press conference told us that, clear, this is a quote, it's clear we've avoided a recession. That's what they said. All doubling down on no hurry. The takeaway from this is the Fed is on pause. The Fed did pause today, not doing anything with any further cuts, leaving rates where they are. The Fed is on hold. Powell was asked quite a bit about tariffs and didn't want to go there. Some of the questions he was asked did express some concerns, but he talked about the uncertainty. We don't know, what tariffs will be implemented, what the tariffs will be, and all these different things. So I thought he would have commented a little bit more about Canada and Mexico, expecting him to be a little bit more hawkish than he was. But he is continuing his hawkish tone from the last meeting. Now, I do want to say this again. Why is the Fed so concerned about inflation right now? One of the reasons is the tariffs. Listen to other Fed officials. They're really concerned over there at the Fed about the tariffs. They believe the tariffs are going to create all this inflation. Okay, and saying this because and again, I'm not necessarily a fan of tariffs. I'm just telling you, I'm just the Western Union boy. I'm just telling you so you understand why is Powell so concerned about inflation? Worried about an overheating economy with the election. He's concerned about tariffs, and tariffs are not inflationary. Prices go up, some prices go down. But the Fed believes all this Keynesian stuff. And these Keynesian myths. Tariffs act more as a tax. And again, I'm not necessarily a fan of tariffs. I'm explaining to you why the Fed thinks what they think. This is one of the reasons why they're so concerned about inflation. They had the tariffs big time back in 2018, and then going forward. And again, we didn't have inflation. Inflation hovered near 2% with the tariffs. So again, back then in 2018 and going forward into 2019, Fed was concerned about that back then too, doing their rate raising campaign. But we didn't see it. We saw inflation hovering just below 2% or just above 2%, counting all that time. I'm not trying to defend tariffs. I'm really pretty neutral on it. I really not necessarily a fan of tariffs, but I'm just telling you, it acts as a tax. We had this thing with Colombia recently over the weekend, where the president was going to implement emergency tariffs on them, and then they backed down, and he rescinded that. But over the internet, this is going to make coffee. Well, the only coffee go way up. Well, it'll make it go up for those that want to buy Colombian coffee, but not for those that want to buy coffee from Brazil. Do you understand? I mean, the tariffs. If you pay more for something with a tariff, well, maybe you just don't buy something else. It really acts as a tax rather than, going and creating all this inflation and everything. So I'll be watching the Dow to see if it does make a new high, and if it does, I'll be watching the trend line here on the daily chart. I'll be watching that trend line there on the weekly chart. It was the Dow's bullish divergence that tipped us off to the bottom for the market. It was the Dow's bearish divergence that told us we were going to get a December sell-off. S&P corrected sideways while the Dow and the Russell sold off. We talked about that at the time, and I told you that if the S&P's triangle broke down, we get a bigger sell-off in the market. We did. Sell-off with the Dow and the Russell. When the Nasdaq peaked is the Fed meeting 6 weeks ago. Quickly, if we just look at the Dow again, it's been an outstanding performance from that low. The Dow is coming back and back testing this trend line right here. They're log scaling. Again, if we continue to try to go higher, we'll be watching this upward boundary right here. See if we tag it again. If we do, I'll be watching to see if we get a divergence between the Dow and the transports, which I previously talked about. Now, I told you I was looking for, in all likelihood, a bigger pullback. I predicted this bottom over here. I told you the 9th and 10th of January that we were going to bottom the following week. We did the very next day on the 13th, on Monday the 13th. And I told you that, again, we would likely fill this gap at 57.83. That was a presidential election gap. And we would hit the trend line on the S&P weekly chart, which was from the 2023 low, and that was right here. We just slightly moved below it, hit these levels, and we bounced and bottomed. We were going to bottom, and we would rally back up. I told you, again, we were developing from the rejection over here, developing a bull flag. Our head and shoulders was turning into a bull flag, and again, predicting the bottom and the rally correctly. Divergence over here correctly predicted the December top, and our triangle ended up breaking down. We got the bigger sell-off. These bullish divergences right here correctly called the bottom here at the gap fill. We had the rally back up, and again, slightly above the December peak. And I told you again, eventually, I'm bullish on the S&P 500, believing it's going higher. I told you we were going to pull back and back test. We had that sell-off on Monday. Deep seek sell-off. We saw the big drop with the Nvidia. The price of Nvidia dropped by 17% on the close, over 18%. And again, the whole tech sector and the AI stocks. Yeah, down today, by the way. The president, boy, he's in the news a lot. The president making an announcement, moving Nvidia on restricting their sales to China. So again, we'll be watching to see that. We're watching that 200 period on Nvidia. So that's some of the news that came out. Moved Nvidia today. The Trump administration considering tightening restrictions on Nvidia's China sales. It dropped. I looked at it. It was over 5% when I looked at it earlier. I don't know where it closed. Maybe we'll take a look at it. It ended down a little bit better than that, down 4%, still holding above our 200 period. We're watching. We're still down nearly 24.5% from the January 7th high with that bearish engulfing. So again, we'll be watching to see, do we fill this gap up here, or do we push down and end up forming a head and shoulders pattern? I talked about if we come back to the August low, you could form this head and shoulders pattern. And that could prevent NASDAQ from making new highs. So again, we're watching closely as it sometimes diverges from the S&P. But again, you've got this possible head and shoulders that could develop here if we see further decline and holding below the 200 period. If we bounce out, I'll be watching the gap fill, and maybe the pattern develops later. We'll be watching possibly for a rebound here. But right now, we're still struggling here surrounding that, and that was the reason for the sell-off today with Nvidia, along with being a Fed day, with the Fed still maintaining a hawkish tone. Now, back to our 60-minute chart of the S&P 500. I told you again, I predicted that we would get some kind of pullback here this week, and we did. We had that sell-off with Monday with DeepSeek and the tech sell-off. We've rebounded back up on Tuesday, and then on Wednesday, another down day here. I'm watching to see, is this thing done, or do we come back down a little bit further and maybe fill this gap at 59.38, or maybe get a deeper Fibonacci retracement? We fell just shy of our 50% retracement of the advance right here. This advance, we fell just shy of the 50% retracement right here, just a little bit lower. If we go down here and try to fill the gap and back test, this is the gap 59.38 from the breakout the day before Inauguration Day. And again, I believe that the election rally over here is, I told you I thought it would bottom out and would continue ahead of Inauguration Day and have a continuation of the election rally. That was correct. And now I think we've had this breakout, predicted that. Told you we'd new highs and pull back, or just be under new highs and pull back, and then resume the advance to go higher. So the pullback, I told you, and I drew this curve right here with this line right here of showing what I thought would happen. I haven't touched it. That's exactly what's happening. Drew that in before Monday's sell-off, before it happened. I think you've got an ABC move here. I could be wrong. This could be done, but my guess is we're going to come down here and probably get a deeper retracement. If I'm wrong about that, then maybe it's done. We bounce off the 200 period here and don't quite reach this level, just close but no cigar. Now, if we end up doing that, again, I think we'll form a divergence if that happens. Again, bottom in here and we now resume the advance, or do we get a bigger pullback? My guess is we'll get a bigger pullback, but like I said, I could be wrong. I think we'll end up seeing this larger divergence develop on the MACD in all likelihood, and again, a divergence develop here on the RSI, here on the 60-minute charts. And again, the 60-minute charts have just been nailing the turns with these divergences. It's been incredible. Now, if we get the bigger pullback, or this pullback that we've already had from Monday's low, if that holds as a bottom, or we get another push down and we get a higher low at a Fibonacci retracement level, again, I think it will be followed by a continuation of the rally. There gets something like this, where we back test here and then we go on and go up to possibly a channel line. I don't know that we reach that high. I think we're going to this July peak now, because again, I think that that rising wedge, which is this red line right here, is pointing right into the boundary of the channel line in our weekly time frame. So while this is a possibility, should we exceed that trend line, certainly possible. Leaning towards more stalling at this red trend line, which would be this scenario. This is the channel scenario here in the daily time frame. And here we are on the daily time frame with the rising wedge scenario. And again, this is what I think is more likely, because this trend line, this red trend line from the July peak, well, it was the November peak, it was a December peak. I think we're going to hit it again, maybe a couple of times here, to complete the topping process. And if we go up and we slam up into this trend line, well, it's going to intersect very closely to intersect with the upper boundary on the weekly chart, as I've talked about. Now, again, and again, I told you this head and shoulders, I thought it was a wave 4. I think that's correct. I think that's minor wave 4. I think we're now in minor wave 5. That we have from the August low, we have 5 minor waves, 1, 2, 3, 4. Now we're getting 5, and I think that's going to complete in the form of a rising wedge here, the larger channel in the weekly time frame, and then I think you're going to get a top. When we reach this level, I think it's going to be followed by a very quick 20% drop over the next month or two, possibly 3. But I told you again, I thought this was a bull flag. We broke out. We are pulling back here. Didn't quite reach a trend line. I still think we do, in all likelihood. Maybe I'm wrong about that though, but I think we're headed. If we do get a bigger pullback, I think we're headed up here towards this trend line. Going forward, I think that'll be wave 3. Then we'll get some kind of pullback for wave 4. Maybe we get a triangle or some kind of pullback here. And then I think we go up and get wave 5. But I think we're going to be straddling along this trend line once again, and it's probably going to look something very similar to what we had over here in November and December. Okay. And again, I believe this is an extension of the election rally, with the rally we got in the breakout ahead of Inauguration Day and the big rally up. I think it's a continuation of that, but I do think we're going to top right here. And again, I think the market will begin to price in a recession. Major resistance up here, negative divergences everywhere, the weekly and the monthly time frame, but I think we buy a little bit more time. This is where I think we're headed, to this trend line right here. And I think we have wave 1. I think we're still carving out wave 2. Maybe wave 2's done, but I still think, telling you what I still think it's still under construction, and then I think we get this big push higher going forward. And again, remember, we're in earnings season. We've got a lot more earnings. We're going to get the GDP tomorrow. We'll have other economic data. I think the MACD is going to form this massive negative divergence up at that trend line there. And again, that really began back over here with the July peak. You got this multiple point divergence. The divergences with that peak have been forming our tops at the November peak and the December peak. I think we're going to get another one here, but the MACD is going to be lower than the previous peaks. That's what I think is going on with that. So again, the channel, possible we overthrow this red trend line, but my guess is that it finishes the move, complete the blow off top. And again, markets end and blow off tops, this whole thing just boom. I don't think it's done yet. So here's my weekly chart. And again, if you look at that rising wedge, here's the rising wedge. Here's that 2023 trend line. We just slightly violated it and bounced off of it. Again, the upper boundary here, these highs are likely where we're headed, and it intersects with the upper boundary of the channel here. So I think this channel is going to play out. All pointing up towards this 63, 40, 50 area or so. Maybe we go a little bit higher. And I told you if we reach the trend line immediately here in November and December, that target would have been lower, but because we didn't and we had the pullback in December and January, which I believe is wave 4, I believe that we're now in wave 5, minor wave 5, complete all 5 intermediate waves, and the whole thing from the 2022 low is primary wave 5. I think it's going to all complete right here, and then we're going to get the market taking 50%. The Fed's going to panic, slash rates. They're telling us today, oh, no, we're not going to. You got people on the internet telling us we're not going to get any cuts. Maybe we get one. I showed you fund futures have been hovering between 1 and 2. I did that chart yesterday. The betting markets. This is what I think is going to happen. I think that will complete the blow off top and will complete the negative diversions. We've already had multiple points of negative divergences give us, different sell-offs in October and the pullback in November, the December sell-off. Again, I don't think this is done yet, but I think it will complete at just a little bit higher levels. I think we're going to get divergences with things like the exposure index here, the NAAIM exposure index. It peaked over here. I think it's coming back up, and I think it's forming a divergence in this more recent price action with our December high. We had the volatility in July surrounding this larger divergence, and also the sell-off there back earlier in March at the March peak. I think you're forming one right here and now in the more recent price action. And again, this is showing what the active money managers are doing. And again, I think it's going to diverge as it did back over here in 2022. That top and some of these other peaks along the way as we've risen towards this upper channel line. So that's what I think is happening there. I showed you this channel on the weekly chart from the 2022 low, the upper channel that I expect. We also have another one going back to the 2020 low. That's with our linear scaling, the other one's with our log scaling. And again, if we go back to the 2022, the pandemic low, and you connect these lows here, the 2022 bottom, and then we go back here. This is a 2018 peak. Could draw the trend line from there, or we could just draw it here from the 2022 highs a little bit lower. But again, I'll be watching these levels very closely. And again, this is a linear scaling. We didn't reach the trend line here with the linear. We bounced off the log scaling trend line from the 2023 low. Here you have this trend line, this upper boundary, which is pointing up into the same area. So kind of interesting. All these levels are at a confluence of resistance. So I still think we're going to push on higher and probably move towards 63.40 or so, and then I think we're going to peak out. I think our time reaching these trend lines that could go into the 6400 area. Again, a number's not my target. The trend lines are my target. We look at our Fibonacci extensions from the 2022 low, this first leg up right here. The Fibonacci extensions gives us a 1 to 2, which is where I think we're headed, right into our trend line of resistance. And again, that's coming in at that low 6300 area, the same area where our trend line is pointing to.